Welcome back, everybody, to another 21st Century Renaissance and another open interest newsletter breakdown on GameStop. I'm your host, Dr. Michael LoPiano. Welcome back, everybody. Another exciting day yesterday. I know a lot of some people out there maybe hurting pretty bad based off of certain expectations. We've been talking all week about this type of situation coming to fruition. I know it can look like a defeat based on how deeply that price dug, and oh boy, did it dig deep yesterday. But there's a lot of positive to look at in here, and I'm really very excited for a number of reasons based on what I saw take place yesterday and going forward. So here's why that big dip actually in a number of respects is actually something for me that has me looking up on the stock. So we're going to talk about that today, as well as our daily options analytics to get a sense of maybe what we can expect going into today's trading. Try to forecast that a little bit as we usually do. So thank you very much. First goes out for a stroke of gratitude. Always Fervent Coffee. Thank you very much, Keith and Tabitha, for sending this my way. Right, still enjoying this every morning. Keith and Tabitha opened their own roastery out in Colorado. They've been with the channel going all the way back to the Reddit days, and have sent me some of their most delicious coffee. So go give it a try. Fervent Coffee Roastery. It is it's very good. This one tastes like blueberry. That's what I keep saying. But not like somebody took some like blueberry flavor and like poured it in. It's like, I don't know. They roasted it with blueberries somehow, which is pretty cool. So yeah, go check them out. Link down in the description. And then of course, thanks go out to our monthly contributors, Dat Scrufto, Ken Wedmerlin, and Not Medical Advice. Thank you so much, guys, as well for helping with my data expenses. I incur sizable data expenses in putting together these breakdowns and articles. So thank you very much for your support on a regular basis, as well as to today's sponsor, Backwoods Degenerate. Thank you very much, my friend, for sponsoring today's video and article. So yeah, let's hop into what we're looking at today. Right. So, very interesting. Oh, man, I was having a lot of fun yesterday with the memes, looking at everything come in, just seeing what just read to me like panic, right? To see Wedbush come out and sort of reiterate their standpoint. This analyst, I think the worst GameStop analyst of all is this guy, Michael Pachter, who's the designated GameStop analyst at Wedbush. So Wedbush through this whole thing has just been coming out and saying like, no, GameStop's, it's $11.50. All right, man. Well, he didn't, right? This was back in like December when we were trading it around, $30. He's like, we don't believe that GameStop should be trading at 3 times cash. It's like, okay, well, the rest of the market doesn't believe it should trade below 2 times cash. And in April, when the stock was $9.95, it reversed super hard to the upside. And at that point, $9.95 was 3 times cash then. So how exactly expensive should GameStop be now, Michael Pachter? Because, now with this $1.3 to $1.5 billion cash infusion, the cash value per share is going to be like $13.70. So how do you devalue the US dollar in GameStop by, whatever that is, like 15%? Like what's going on there? Is it possible that somehow Wedbush is connected to financial interests that compromise the impartiality of your analysis as a financial journalist and sort of equities analyst? Is it possible that could be the case? But in any case, right? So I enjoyed making memes yesterday. But one of the things I wanted to point out, and this was something that I, by the grace of God, was inspired to talk about during yesterday's video, and this was a top topic, right? Pointed out that over the course of the last year, what have we seen on these big dips? What have we seen on these low moments? We have seen that GameStop has not sunk below a price to book value ratio of 2.0. So something about institutional pricing, if it's algorithms or whatnot, what have you, institutions over the past, basically since these equity raises and this massive fundamental transformation of the company last summer, centered around Roaring Kitty's return to X and to Reddit, that this since then, with the exception, I think, of a single day, which was the bottom of the Nikkei crash, this lasted maybe like a couple hours. GameStop has not, institutions have not allowed GameStop's price to go below a price to book value ratio of 2.0. So I just did some basic math and pointed this out right when this occurred yesterday, in the middle of the day, right? Just went ahead and posted on this. And sure enough, okay, if you take, right, you take this pre-market valuation, or pre-market valuation, you take this pre-offering valuation. GameStop's going to get 1.3 to 1.5 billion cash. The company says that they're going to be expecting to get that on April 1st, right? I mean, April Fools, so maybe they think maybe they're going to get it a little earlier. Maybe they already have it. Who knows? Don't want to speculate too hard there. But right, what I'll say is if you take the cash that is from like add in some of that cash from after earnings, right? If you take $21 and multiply that by the shares outstanding, you get around a 9.25 billion market cap. Divided by 2 is about $4.62 billion, which was equivalent to their cash prior to this particular to this earnings. Okay, so where did we stop yesterday? 2116. That roughly equates to the 4.75 or 4.775 billion that they have on hand, multiplied by 2. So what happened here intraday? Once again, reflecting the cash value of the company prior to the infusion of the capital from the senior notes offering, we did not go below a price to book value ratio of 2.0, despite this absolute onslaught of bearish pressure on the stock. I mean, over 96 million shares were traded yesterday. That's nearly 1/4 of the free float. This is insane, right? This is insanely bearish for what is bullish news. This is what GameStop has proven with these at the market offerings and what's been reflected, right, with these lows over the past year. So, for example, talked about this yesterday, the low following the first offering, the low following the second offering, and the low following the third offering last year were all accretive lows, right? So these are, or I should say, these offerings prove themselves to be accretive by virtue of those lows, because the floor raised despite the fact that the total number of shares outstanding increased. So it meant that the minimum value on a share was increasing, even though more shares were being created. So this is the difference between, and Fox and Flash pointed this out also yesterday, did a very good job at this, right? Pointing out that the difference between a dilutive and an accretive offering is a dilutive offering means that your floor is getting lower. You're just separating out more value. You're portioning out smaller amounts or smaller parcels of value to current shareholders with the introduction of new equity. That's not what's occurring here. New equity is coming into the company, but as new equity is coming into the company, as new capital is coming into the company, that capital is actually increasing the value of that is apportioned to each shareholder, despite the fact that there are more shares in circulation as a result of that capital induction. So this has continued to happen. And what looks to be the case, once again, what has been the case throughout the entirety of the past year, is that this will be another accretive offering. So why was I so excited seeing this happen yesterday? This tells me that yesterday that occurred, right? That was respected. That 2.0 book price to book value ratio was respected intraday despite this onslaught. And that this tells me that when we're going to get this, when this 1.3 to 1.5 billion dollars in cash comes on the books, that is going to be reflected once again in the minimum value of each share. So if you say conservatively, right, and I did the math out on this, I forget, maybe I just did this in a chat, but we'll talk more about this on the stream today. If you're inducting, let's even say 1.3, let's take out the 200. If you're inducting 1.3 billion and how is that going to be assessed in the price? Well, the shares that correspond to those notes haven't been created yet. They won't be created, and they might not be created at all, 3 to 5 years down the road. Okay, so it's not, you can't count them as shares outstanding yet. So you can't, apply that to how you're doing a price to book value ratio or calculation, as you would say with an at the market offering. So it's not going to be, it would be something like that's equivalent to close to 10% of the company. So let's say, okay, you create 44 million shares. You can say conservatively, like kind of a lower threshold calculation, that's going to correspond to 44 million new shares. If you, I guess, most optimistically, you don't factor them in at all. So the real value is going to be somewhere in between there. So if you say that it's going to be 44 million shares and it's going to count just like an at the market offering with a 10% increase in the total shares outstanding, then you're looking at a new floor on GameStop with this 1.3 billion, even if it's just 1.3 billion, of about $25.06 as a floor, as a new floor, right? Okay. Now, let's if you use the more optimistic one, then you're looking at a floor, right? Let's say you don't increase the shares, but you just factor in that 1.3 billion cash. You're looking at a new floor of about $27.65. Okay, so it's probably going to be somewhere in between that, right? How that's actually going to be priced in. And there's also this option to get another 200 million in equity. So that might increase further, right? So you're looking at a new floor that's going to be probably higher than $25.06, probably lower than $27.65, somewhere in that range. That's going to be the new trading floor on GameStop. And as we've seen, even this Nikkei crash, this crazy event we had last August, I think it was for a period of maybe 2 to 3 hours, we had GameStop trade below a price to book value ratio of less than 2. So we'll walk through this again. Like, we can go into detail, and I'll show you each of these moments. We'll talk about this on the stream tonight. So right, every Friday we have streams on YouTube and on X at 4 p.m. Eastern time. So we're going to break this down. We're going to talk about the offering, talk about who might purchase the offering, what this is about. We'll spend a little bit of time right now, actually, if we move down and talk about, why did we really push so low? Why did this occur? What was going on? Why would bullish news make institutions go ahead and just crazy shove this down? And, just to kind of talk about it in brief, one of them is what we also talked about yesterday, which was, man, is there a lot of notional value in swaps expiring today and Monday? And those expiring today are very, very underwater. Whoever the short party is very underwater on those swaps. There is approximately 40 billion in notional value expiring today. So part of this, I think, had to do with institutions who needed to roll or close their short swaps. They were open. They're deeply in what they were open in the 15 to 18 range in 2023. So there's already been some significant premiums paid on these over the last year, and now they're getting marked at something very, very heavily underwater. So if they were able to get this down to 21, they can probably stay alive. But man, if we were trading up in the 26s, 27, 28, these were going to be death to whoever was holding them. The ones on Monday are a little bit, they're not as much as of a problem, right? They were opened in the 21 to 24 range, upper 21, so around 22 to 24 range. So they're okay, right? If these can get marked soon, they're going to be okay. They're basically, they're still not going to be up because of premiums paid over the past 2 years and premiums that will be paid. But if I were whoever this was, right, I would go ahead and I don't know. I don't know I would go ahead and close these. I don't know anything, right? I don't know what goes into these calculations. I don't know how much of this position in one way or another is used as collateral to hold up some other position. So I don't know. I would close these. I don't know. But I don't think it's going to work out, right? Especially if the floor going forward after this equity raise is going to be at least $25 in the most conservative situation. I would do something about those. That's a never gonna work out for you bet, is what that means. That's why the senior note offering is so huge. These swaps, if they're rolled, and they will never win. They can never, like, this seals, right, what Ryan Cohen and what GameStop are doing now with this offering. What they have done over the past year has sealed the 328 swaps, all of them, permanently underwater. Unless something goes massively wrong with all of their investments, they're sealed. Well, now here's the other thing, and here's why this investment is very interesting. This equity raise is very interesting because it's very likely that 4.7 billion in cash, 4.75 billion in cash that they already have, that's probably already the seal on that swap, right? As we saw, we couldn't get below 21. 21.16 is a 2.0 price to book value ratio based on the cash that GameStop already has before the senior note cash infusion. So that cash, as long as you just stick that in treasuries, that cash itself is just going to pick up a couple $100 million a year and is going to further, like, that's already cemented, right? Those at $15 to $18 swaps are permanently underwater because of that cash pile. That's a cement floor. What I think Ryan Cohen is likely to do is to take this new cash infusion of 1.3 to 1.5 and then put that into something like Bitcoin. What that does is, okay, that can fluctuate. So, okay, maybe you put it into Bitcoin tanks. And so the floor fluctuates down from, the position. Let's say it loses 50% of its value. Let's be crazy with this. GameStop's floor in the most conservative situation only goes to like 23.50. Okay, right? Like this is the situation that who's ever holding these swaps is in. So some decisions need to be made now. There's another factor which is important to point out here, which influenced this, but whoever is holding these swaps needs to make some very important decisions or they're really done. This doesn't get better, right? This situation doesn't get better for whoever's holding these swaps. It only gets worse from here. This is as good, that 21.16 or whatever, that's as good as it's going to get. Okay, so there's that. The next is, and I really like to point out, Han Akamatsu over on Twitter pointed this out, did a really excellent write-up with respect to this. Another reason for what we saw yesterday, what determined our price action, was the senior note pricing requirements. So these notes were priced between 1 p.m. and 4 p.m. Eastern time yesterday based on the volume weighted average price across that period. So number one, whoever wants these senior notes wants to get the best deal possible on them, right? So to have them and then have sort of the biggest handover, right? If they can push the pricing down, so the pricing is very low, they acquire the notes, they correspond to a sticker tag price on the shares of, it turns out it will be $29.85, so that when they're redeemed, there'll be that much more profit on the notes. They'll get that many more shares, presumably per note that they acquire. So what they did, right, is number one, push the price down, but you'll notice that the price hit its low in the first few minutes after 1 p.m. And then the volume on the stock went nuts, right? Why would the volume go up? Well, because they were priced on a volume weighted average price. So this segment of the day, where we were low and trading in the 21s and 22s, this segment of the day was weighted twice as heavily as these prices from early in the day, right? So we can see this lighter blue line here. This is our VWAP line throughout the day. As soon as volume picks up, we really start to move down pretty heavily. Okay, so essentially from this, all of these values were then taken together combined, calculated, and then 37.5% premium was added to them. So that's what resulted in the $29.85 price tag on those. They cannot be redeemed for shares. This was very interesting. They cannot be redeemed for shares in for less than $38.80. So if GameStop's price does not exceed $38.80 in the next 3 to 5 years, the notes cannot be redeemed for shares. That was my understanding. We'll break some of that down again. We'll take a look together on the stream. But very, very interesting to see that play out there. So those two factors, I think, were the most operative on why our price action looked like it did yesterday. We had a lot of institutions potentially who were very interested in seeing both of these things kind of play out. And I think this created this, along with, a ton of options pressure, massive pressure on the stock downwards that nonetheless did not fall below that 2.0 price to book value. So that's as big as it's going to get, right? That was the kitchen sink, as I called it in this breakdown here today. Okay. So what does this look like for us going into trading today? Well, the options landscape's a little crazy, right? We had in 2 days, we had more premium spent on options than in the past 2 months combined. OI just jumping out all over the place across all expiries. IV going nuts with this crazy increase in volume. It's almost double, like IV for this week is almost double what it was going into earnings. It's crazy high. We have hundreds of thousands of new contracts added across all of our options chains. Max Payne's moved down to 24, right? So as a result of Wednesday's trading, it moved up to 26.50 from 24.50. And now as a result of yesterday's trading, it's back down to 24. So it's moving all over the place. We have a new call wall in place, right? At 25, it's moved down from 30 to 25. We have a ton of new puts basically in this lower territory here below $25. So what does this tell us? Well, it's going to be very difficult to sort of predict how each individual strike is going to behave or whether we're going to get stuck in that at a particular strike. We can say with confidence, right, 25 sticks out as a call wall strike. It'll have resistant properties intraday as dealers sell shares as it's approached. Well, they'll buy shares as it's approached, but as it is about to go out of the money, or as it is about to go in the money, they will start to sell shares. So it'll put some very heavy downward selling pressure on the stock as it's approached. We do have a lot of volatility built up basically off of, well, really even off of 20, but we have a little divot there at 2050. So probably around 21. So last I checked, it looked like we were trading down basically close to yesterday's low. Yeah, almost got there. We got down to 21.35 pre-market and then whoop, just kind of banging our way back up there. So, this way they can use the volatility from this very put dominant range. They can get traders perhaps to start taking profits on puts, right? They can start taking profits on puts. That's again going to drum up IV. It's going to, crank up prices on calls, the like, right? So it's going to shoot up, and then they can just ride this volatility chain basically up until like 23 here, where it might slow down. But as they close, that's going to be an easy position to overcome, and it can just it can just shoot up. Everything going on that solid trajectory, they could have calls get really, really, really heavily, heavily appreciate in terms of the rate of change of delta. So their gamma values are going to go nuts. And then right when we get up to 25, they can, it will stall here. They can distribute those calls toward intraday buyers and then allow the price to then fall back the other way after they've unloaded them, something like that, right? And the put closing stops, right? Because put closing would happen here, which would have that upper pressure on the stock. They distribute around 25 once they hit the call wall. Retail traders get excited, right? Less experienced traders get excited and they start buying in here because they think it's going to go higher. The calls get distributed. The puts are all closed now, and then it falls off. And so then traders come back in, more experienced ones, institutions, and they push the stock down. And then all those calls end up worthless, right? Something like that. So dynamics are probably going to shift a lot intraday because I expect traders are going to be closing contracts left and right early before they get to expiry. That's going to shift where our max pain is. That's going to shift the character of our individual strikes tremendously throughout the day. It's going to be quite the day. I'll bet you we're going to bounce around quite a bit, and that's to say nothing about whether we actually get an announcement from the company that they have closed the senior notes offering. Now, they said they expect it to be done by the 1st of April. However, April Fools, right? Like they could just come out midday or something today and say, hey guys, guess what? We have the 1.5 billion now. In fact, we had it yesterday, and then just watch the algorithms pump the stock back up to a minimum of 25, which would cause a crazy gamma squeeze intraday, right? As all of a sudden the options market maker has to hedge all these positions, and then who knows, we go back into that upper range. Not trying to speculate, not trying to get anybody too excited here. What do I think the odds are of this happening? I don't know, right? I don't know how to put a probability on that. But I will say that is possible. So it's going to be a ride, right? It's going to be a ride every day, right? It's going to be a ride all throughout the day. The playing field will indeed be random and jagged. Heading into next week, right? That's going to be still a major concern. Are we going to get that announcement? That's also going to pump IV whenever that comes. That's probably the type of announcement that would end up being, what would you say, volatility proof in the broader market, which, right, we didn't touch on this too much earlier. All of a sudden, all this excitement in GameStop, we don't care about SPY anymore. We're going to get some downside volatility, probably continuing today into Monday. We're going to get that JPM collar trade roll. They're going to roll their put hedge at SPX 5565. That's gonna pull the market down into that, or that's going to get pushed down into that, so that roll can occur. And of course, we do have heading out to April OPEX, right? We still have that bearishness. So volatility is going to come back into the market, but it's going to be very interesting to see what that announcement does and how that's assessed. And man, are also, whenever the date is there had to have been a massive amount of FTDs yesterday, tremendous amount of cat errors that the SEC won't tell us about, that conveniently will have FTD data obscured, right? Something like that as a result of yesterday and the day before's trading. That in, somewhere between, there'll be margin calls in 29 days, and there'll be T plus 35, and there'll be T plus 32 trading days, and there'll be, and so on and so on and so on into May and June. And we're going to have random days where nothing is supposed to happen. And there's going to be speculation about this date and about that date and about this one and about this one. And this one's going to get a T plus 6 extension, but this person's not, right? All this stuff is going to be occurring now between April OPEX and June, when we have more swap rolls coming at the end of the month. A decent amount of swaps, about 10 billion in notional value, not quite as big as this month, but June 30th, we do have some of those coming up. It's the next biggest one, right? We got 20 billion coming due October 20th. Again, here we go again. So going to be very interesting to see what happens with GameStop. This new amount of cash, and maybe if they keep doing cash infusions every time, right? What if Ryan Cohen and company time up these cash infusions with these massive volatility days of FTD covering and things like that, of margin calls? Who knows? But it may be, it's going to be a thing to behold. And I'll be here along with all your friends on YouTube and Twitter, trying to make sense of what's coming up for us in the near future. So that's what we're looking at today. Definitely stay safe out there. We will, oh man, I stayed big face the whole time today. Whatever, man. Anyway, we'll talk about this, and I promise I won't be big face the whole time heading into our live stream today. So our live stream at 4 p.m. Eastern time after market close, we'll go into some deeper detail on all of these dynamics, on what this might look like several months going out, and some more on the earnings, on the convertible note. Of course, we'll have today's price action to discuss as well. So it's going to be a great time. It'll be on X, streamed on X and on YouTube. So do stop in, and we'll see you guys there. So as always, thanks very much for watching and listening, and look forward to seeing you at 4 p.m. Eastern time today. Thanks.